Oil prices continue to trade in a narrow range as traders struggle to find a direction to follow. Hello and welcome back to our channel. My name is Daniela. In today's video, we're going to be looking at oil prices, specifically US crude, because we've seen the momentum stuck to a narrow range in the last week or 2 weeks. And even though we've had some data with inventories, we have some macroeconomic events going on as well, we're really struggling to see any momentum come into US crude markets. So before we get into it, please like this video, comment, subscribe. And if you have any questions or suggestions, feel free to leave them in the comment section below. So as I was saying, oil continues to trade in a narrow range. We've seen US crude specifically stuck below $80 per barrel, but also finding a little bit of support along that $78 mark. So struggling to find any momentum other than going sideways at the present. And that is, of course, even though we have seen some data, the biggest focal point on the calendar right now is US inflation, what's happening with consumer prices. We'll have more data for that this week, but there are still concerns that inflationary pressures remain, and that will push back those expectations that the Federal Reserve could cut interest rates. And of course, the longer interest rates are kept at higher levels and the less wiggle room the Fed has to cut, the more downward pressure there is on the economy. So there is this view that once the Federal Reserve is able to start cutting rates, loosening the monetary policy conditions, we could see, a resurgence in the economy, and that could spur further growth and therefore consumption for crude oil. So there is still those concerns from investors, and it is very much a picture that is currently dominated by the macroeconomic picture in the US, specifically how the Fed is evolving. But other than that, we've seen some other things. We've seen API crude oil inventory data on Tuesday coming out, showing a 3.1 million drawdown in the barrels there. So that was more than expected. So that is some positive momentum into price. We really haven't seen traders be able to capitalize on that, to be honest. We're still seeing some downside pressure on oil prices, despite the bigger drawdown than expected. On Wednesday evening, we will see the official US government inventory data, also expected to see a drawdown. So that could offer a little bit of further momentum. But of course, the CPI data will likely dominate the momentum and see the majority of the moves coming from there. As I said, if we do see higher than expected CPI, expect to see a little bit of further downside pricing in oil prices because of mostly what I said, how it pushes back those expectations of rate cuts from the Fed. Conversely, if we see a weaker reading, softening inflation, we could see a rebound in oil prices, potentially looking to break above that $80 mark for US crude. We've also got other things going on in Canada. We have wildfires going on, and there are concerns that that could disrupt supply. As we know, Canada is one of the biggest suppliers of crude. So that is definitely something to watch out for. We haven't seen any direct impact just yet, but it could offer a little bit of tailwind for oil prices if we do see those concerns intensify. And elsewhere in China, we've seen plans to raise 1 trillion yuan to help stimulate the key sectors of the economy that have been struggling the most. Again, some positive news from China. China being one of the biggest importers of crude. Again, that could support oil prices in the short term. Seeing a little bit of a bounce higher. As I said, the majority of the momentum currently dominated by the economic landscape in the US, but we are seeing these other areas of focus that could provide a little bit of support to oil prices, especially if we see the CPI play in favor of higher US crude oil prices. The other thing to watch out for is the COT report, the Commitment of Traders report, showing this week that the large speculators and managed funds have actually swapped a lot of their long positions, so closing long positions, in favor of shorts on US crude. So essentially suggesting that we could see some further weakness in oil prices coming from these large institutions. That is it for the macros. It is a bit of very much a barrage of factors going on at the moment. Also something to watch out is even though we have seen some of those tensions in the Middle East decrease, we've seen some of those risk premiums priced out of the market, and that's why we've seen also some weakness in oil prices in the last few weeks. as traders have priced out some of those premiums, it is still something that continues to offer somewhat of a support for oil prices, given that is still an area of concern for markets. So not as much of a bullish factor right now, but also something to continue to consider, which could once again provide further support if we saw any further news coming from there. Let's jump onto the chart now to see how it's been trading. Okay, so looking at the US crude chart, this is the daily chart. We can see, as I was saying, that rejection just below those $80 per barrel. We're seeing some weakness from there. The current price is also trading below the 200-day simple moving average. So that tends to suggest some weakness in the longer term, but it's also trading below the 50 and 20 days. So also in the shorter term, we're seeing some weakness in US crude prices. There is a fair amount of resistance up ahead. As I said, not only is the $80 per barrel mark a significant resistance, we've also seen in the attempts over the last week to push higher, significant resistance around that 79.50 area. So also somewhere to watch out for if we do see that bullish momentum push higher. But beyond there, we also have this key area of support resistance. I've talked about this in the past. It proved its worth back here in April when we saw definitely some indecision around this level. And even though we did manage to break higher, we can see that on the daily candlesticks, most of the time we returned back to this level at some point or another. So definitely a key area to watch out for if we do see some further follow through in the bullish momentum, let's say from a weaker CPI reading, then expect to see again some further resistance just around that 82.50 level. Again, we may breach it in a few instances, but it's definitely somewhere to pay attention to because we often see price returning to this level. On the downside, we have seen some support as well. As I said, it's mostly been sideways trading, as you can see. So far, there's been support just around that $78 mark there, as you can see. In fact, in 4 of the last trading sessions, we've actually seen price dip below this level and actually come back and return within the session to close higher. So again, there is a fair amount of support. There is really no appetite to be a seller right now at these current levels. Again, that may change with the CPI data. We do see stronger than expected readings, and we see that reinforce the view that the Federal Reserve is going to have to continue pushing back on rate cuts, potentially not seeing any this year. Then we could see some further weakness in US crude. Also watch out for what the dollar's been doing, because we have seen some dollar weakness in the last few days, and that hasn't really materialized to US crude. So obviously, seeing some weakness here fundamentally for crude, as I said, pointing out all of those factors we just mentioned with regards to the fundies. In terms of technicals, clearly indecision right now, a lack of direction. I think we're looking for that next catalyst, which is likely to be that CPI data. We do have some support and resistance either way. For me right now, there's more resistance than there is support. But I think if we do see that appetite to push higher, we could break that $80 level and potentially come back into this key support resistance range between 80 and 82.50. So that is pretty much it for the technicals here. As I said, sideways trading expected to be broken at some point. There is some further follow through to the downside if we were to see some weakness in the oil prices stemming from that higher CPI data. That is it for today's analysis on US crude. Thank you so much for watching, and don't forget to subscribe to our channel.